there, traders. Todd Gordon here. Welcome to the Wednesday webinar. It is the 22nd. Let's see, just check it in. I think we're good. Let me just check on the watch page here. Make sure audio's okay. Good morning, guys. Nice turnout. So a lot happening here in the markets. Good futures rebound after a little bit of a lot of stuff happening around the world. Volatility yesterday really from the fears of coronavirus that I think was quickly discounted. I think overall yesterday the market acted pretty well. So we're continuing to be long. We've got some pretty strong opinions for you guys here. We are positioned as such. I've got the team, as always, standing by. Let's bring in the Fearless Trading Analysis team. Good morning, guys. How are you?
Good morning, Todd.
All right.
Good morning.
Good morning, Alex.
Good afternoon.
That's right. It is afternoon.
His day's half over. By the time we wake up in the morning, he's already put in a full
here.
Day
It's a time for lunch, guys. It's a time for lunch here.
Yeah.
At least you're not vaping, but I don't know if you might need to wear a different shirt than black, Alex. Black on black, you're like the dark Cape Crusader of crypto and foreign exchange markets.
No, actually, this is blue, but it's a dark blue.
Oh, really? Okay. All right.
We got to chroma key that out.
I missed maybe a little bit of light. Yeah.
He's in the crypto cave. Yeah. All right. So, let's see. Good morning. Hey, viewers, how are we doing? Okay, audio okay? Any issues? I'm not using these little headphones that sometimes create a echo, so just let me know if that pops up. Other than that, we will...
Yeah, it sounds your new set. It must be in a second microphone or something causing that.
Sounds is great.
Or a speaker or something, because it sounds good.
Okay.
Yeah,
right.
Fantastic audio.
Hey. Just in time for Bennett to take over production. I think I finally figured it out after 2 years. Oh Lord!
Oh my God! So you're exiting on the top, huh?
I'm just going out on top, right? Just like how we're going to sell it along positions. Christian wants you to wear pink next time, Alex. Oh, here's the other thing. I got this little B&H audio. Anybody who does technology at home, I mean, I just call them when I have any questions. Like I used to just go to YouTube and search how to do anything. I needed to get that big stupid microphone boom out of my face so I could just look at you. I didn't know how to do it, so I just called B&H in New York City. Those tech guys will walk you through anything, tell you exactly what you need to do. So, anyways, I'm sure you guys care zero about that. But if you go to New York City and you're a tech geek at all, check out B&H. Terry, have you ever been there?
No, I've heard you talk about it before.
It's mind-blowing. I mean, it's completely unbelievable, all the technology they have in there. So, anyways. So, what's going on? I think, guys, we're in a extremely strong bull market here. I can't help but trip up over Tudor's comments. Paul Tudor Jones' comments yesterday that this is like 1999 all over again. It's the perfect blend of fiscal and monetary kind of conditions. We have a administration that is trying to ease the tax burden while the central bank is trying to keep liquidity ample and interest rates low. Perfect storm. I just can't deal. And tell me, guys, Trade Analysis team, tell me if you're seeing the same thing. And viewers on the YouTube channel, how many people have approached you guys? Like, I'm talking to everyone because probably everyone knows that you're into the markets, especially the Trade Analysis team. And viewers, obviously, are active in the markets. How many of your friends and family said, oh, my God, is this it? Should we sell? Is it time to short? Like, it's just, I can't get over. I can't get over how quickly people are to distrust this rally. I mean, have you guys kind of seen that? Have you experienced that? And what are your thoughts?
Yeah, exactly. And then, my neighbor said, "Oh, how much is it going to go down?" And I'm like, well, But yeah, you know, trying to explain and say the market, how's the market ever going to continue to make highs? You know, I mean, if everybody, as soon as it makes a high, somebody thinks, you know, oh, this, you know, it's ready to drop. So yeah, I said, yeah, well, we're a bit extended. Maybe we've got some correction in, but I think our position is that the end of the world correction is not the immediate thing that's about to happen. You also had Stanley Druckenmiller and Tepper posting, I'm going to ride that horse until it, you know, I'm going to ride the horse that's still running, right? And and Druckenmiller, and they're all still in the market. They're not the ones jumping ship yet. So those are the big money men. So
yep. And you know, I hate to talk smack over, you know, against obviously Stanley Druckenmiller and Tudor Jones, but you know, you could easily go back and search last year them, and I specifically Tudor. And I remember Druckenmiller as well. Druckenmiller saying that the market is extended and is due for a significant correction. Even the biggest global macro hedge fund managers of the world have capitulated and say, oh, now we're going up. These guys were bearish. I don't think they were short. I just don't think they were heavily invested last year, and they were saying the market's going to move lower. Now all of a sudden the market breaks a 2-year range, and you know, now they're saying the market's come too far too fast.
I think I heard Druckenmiller say that he got into it and he reversed course in October.
In October, November, right? But
yes, but then that's kind of when we seeing everything in our rotation moving in. All the stuff that I keep pulling up on the rotation that's coming back in. It all kind of started in that October, November timeframe.
It was not hard to see it, and I put the positions on. I went heavy in the markets, like I told you guys in the Wednesday webinar. We said it with the members. I'm a little flabbergasted how wrong and how reactionary some of the best in the world are. And I just think if you take a simplistic technical view of the market and just say, look, you know, we've been sideways for 2 years. The market broke consolidation. Why are you overthinking this? We
were overthinking it because we didn't put too many option plays in.
Not too many options.
Just left your long-term holdings and you know, just run with the market instead of trying to jump in and out with swing trades.
I mean, look, the market was sideways since January of 2018. And Bennett, sorry, I don't know what I'm doing. Sorry to put my hand over your.
No worries.
Tickle. It was sideways. I don't know how to undo that, Bennett. When you take over production, you'll do better job than this. But guys, like, okay, look, what's the standard measured move? What's the standard projection following a sideways range? Like, this is technical analysis 101. You basically take the depth of the range at the extreme. You then copy, paste it, Control-C, Control-V, just move up off the top. I mean, a standard measured move puts you 3,600. Like, and all of a sudden we've got a little bit of a break higher. Yes, it's been in a pretty amazing move, but the market's been sideways for 2 years. Like, what is everyone talking about? I just don't. To me, that's it's so frustrating. Like you're going to see a little bit of angry Todd here. I'm like, look, I mean, yes. I put a lot of money to work. I'll show you exactly the positions I'm in. It wasn't hard. I've got $100,000 in XLK. I've got another 100,000 in Qs, 126 in SPY. Look when these trades went on. I went into this market in November 27th. And I was late perhaps to the game. I mean, I started buying in July, October, into November. I mean, it's just not hard to accumulate gains. I was cautious about going into, sorry, there's my Slack window. I was cautious about getting into options, paying for premium, following such a long-term consolidation, because it's hard to pick the end of a consolidation. You might bleed time, theta might work against you, so that's why I wanted to focus on the stock market side of things. But I'm so surprised how wrong some of the best traders in the world have gotten it. You know, and of course, we don't know what their positions are. You know, they're saying one thing, they run billions and billions of dollars. So I am not even pretending to be anywhere near at their level. Clearly, I'm not. So we don't know, in fact, what they're doing. But their outward-facing media exposure, that interviews that they've given, I'm surprised how wrong they had it. We're now in earnings season. Of course, expectations for earnings are elevated. We certainly have to justify these higher multiples that we're seeing, but there is incredible opportunities here in the market. Any closing thoughts before I make address the other announcement that I made, guys? Thoughts, comments? Do you disagree? Tell me what you're thinking.
I completely agree. In fact, if you take a look at the January 2018 highs, we're like 16%, in 2 years. So although we've come a long way from the 2018 lows in December, overall, when you take into consideration, the entirety of the move, I don't think it's out of the question.
I think we did this exercise. I agree, Ben. I think we did this exercise in the member webinar. I don't think we did this in the YouTube stream last year. But what if we got super simple here? And I kind of like this exercise. Did we do this in the members webinar, or did we do this in YouTube last week? Or we just kind of
member webinar.
Okay. So where did the market break consolidation here in 2012? Let's call it maybe right here. I'm just going to go to the edge of this oval and just go straight up. All right. I mean, this is clearly a subjective exercise. So this complete oval lasted, consolidation lasted. Come on, pop up. You can do it. Sometimes it'll give us a little pop up and it'll tell us the duration. Whatever. Jan of 2010 to Jan of 2012. That's kind of easy math to do. 2 years. Followed by a rally of, I don't know, about 50%. Okay, so let's just borrow this oval. Let's just do the same kind of exercise. Oh, look, about another 2-year consolidation, followed by about a 30% rally. All right, let's just do it again. I mean, guys, this isn't hard. This is just simple logic. And sometimes trading and investing just requires you to set the emotion aside. All the academic elites who think they're so much smarter than everybody else, sometimes it's just a trend-following moron who doesn't overthink things, who does the best. I mean, look, we just did 2 years and we just broke up. We just broke higher. We did, I think this was a 50% run. Let me just do a quick, oh, come on. I'm so out of practice with Elliottwave. Come on. All right, let's just take a quick measurement of the distance rallied here. 60%, 60.66%. Oh, that's, let's measure this break up into the highs. This is going to be 38%. So we've got 60%, we've got 38%. And so far this rally that everybody is so afraid of, the break has gone 11%. I don't think it's time to not be long. I don't think it's time to be short. I think it's, anything that happens with this coronavirus, any volatility that we see. We're in Davos so far. Trump's reception has been strong. Earnings, any volatility, I think, is the opportunity to buy pullback. So that's that. Again, any comments or question, guys, before I talk about kind of this announcement that I made?
No, I think that should do it.
Okay, cool. All right. So let me just address this real quick here, guys. Kind of an exciting announcement that I've made. I've kind of hinted around this for a long time. Recently, I moved up to perhaps moved away from New York City, New Jersey area, and went up to Saratoga Springs, where I'm from. I'm 40. I've been in the short-term trading world my entire professional career, and this is something that this is a change that I knew was going to be coming. So just want to talk about it quickly. If you didn't see the announcement on the Trading Analysis website, I wrote a kind of a long letter, an explanation of what exactly is happening. Long story short, I have joined a wealth management company here in town. It's called Ascent Wealth Partners. It's something that I've been working on for a long time. It's something I've wanted to do. As I've gotten sort of older, my trading time frames has evolved. As I write in that note, which I'll point you to in a sec, I was a super short-term day trader when I was 21 and 22 coming out of school. Went to position trading, swing trading when I was at the hedge fund on Wall Street. Here I am 40. Obviously, I'm more working towards the investment time frame, and that's where my interests are kind of realigning. So I've wanted to sort of move into wealth management for a long time. You guys know we've been very very transparent in the way we run trading analysis. I think you would agree that we're probably the most transparent and tell you like it is. No BS marketing, none of that get rich quick stuff that a lot of the businesses out there do on the internet. There's low barrier to entry in this trading education space, which is very unfortunate. There's very little regulation that holds people accountable and organizations accountable to the marketing they put out there, and that's always caused me a lot of stress and concern, and I don't like to be associated with that, frankly. So my trading analysis is we've always worked with integrity, and that's why we're allowed to have the partnerships that we've had with, I've worked with CNBC for 12 years, with Elliottwave International. We've had other large entities want to partner with us because of that integrity. So that continues. That being said, the world of wealth management in this market, where so few have got it right, is really where I want to be. And so I joined a top tier firm. They're just under they're a wealth management RIA, which is a registered investment advisor. This is a booming industry, as a lot of businesses being lost to the big banks and wirehouses and traditional brokerage models. The independent advisor who is not constrained to some kind of higher entity in terms of the technology they use, costs they must charge, products that they put their clients in because that's what their wirehouse or bank would structure. It's the truest sense of this term called fiduciary, which is the wealth manager is bound to act in the very best interest of his client. So this RIA space has exploded in the last few years. A lot of attention has been put on the social media and this kind of stuff, which I really like doing, as you can tell. So with that, I found a really good firm in town here. They're just under $1 billion under management, and they welcome me with open arms. So that's what I've been doing. So I am now officially working with them. I'm going to be doing two jobs. I'm going to be overseeing trading analysis. Trading analysis will continue. I've been working hard to build up this wonderful team, which is right here to run the show. And half of the guys are not on the screen because they're not public facing. So trading analysis continues. Alex, Bennett, and Terry are your public facing people at Trading Analysis. I will continue to stay involved, keep an eye on things. I forever will love Elliottwave. Frankly, I don't know what you guys think about this, but I'm tired of teaching Elliottwave. Good luck, boys. I'm sick of it. I love it dearly, but I'm tired of explaining it to people who just can't open their minds. So I will probably be a closet Elliotician. Bennett, Terry, Alex, you guys get to carry the torch and carry on the good word. I hope you understand that. I'm saying that tongue in cheek. I love Elliot, but so few people are mentally equipped and open-minded enough to want to accept. So nothing really changes. Trading analysis is going to continue to operate. It's going to continue to grow. Bennett and Terry, they are much more organized than I am. They're much more systems driven. They know how to run a business. So I think trading analysis is in a better position. I will advise. I'll keep an eye on the markets and input where I can. Alex is hammering the cryptos and the Forex. We have a great team behind. So nothing changes. That being said, if you would like to speak to me directly about wealth management, we have I'll be right back, guys. I just want to finish this little pitch here. Not really a pitch. The reason I chose Ascent is not only are they an excellent portfolio manager, but they're very well versed in all aspects of planning. There's 3 partners. One of them is a Harvard guy who runs the portfolio with his analysis team. I will be consulting on the portfolio. The other guy has got 2 law degrees, extremely good. The third partner is a CPA. So what I really like about them is they have all aspects of financial planning. They take care of their trusts. They take care of insurance. They take care of wills. If you're selling a business, they can advise on that. So it's full full service that really is included in the management fee. Obviously, we have a minimum. You know, if you have a smaller 500 or if you have a $50,000 or $100,000 account, that's not really the client we're looking for. We're looking to have a full relationship with you. I will be advising on the portfolio, but I have a team. There's 13 of us at Ascent, and the full aspect of financial planning and portfolio management. So if you're interested, you could send me an email. I'll give you my email here. It's let me just pop it up, and then we'll go back to business here in a second. If you're interested, please just drop me an email here. I'll give you the email. It's toddg@ascentwp.com. All right. So if you're interested, let me know, and we can have a consultation. I'll bring one of the partners on, and we can talk about it. Okay, so that's that. Bennett, do you want to take over here? I got to launch GoToWebinar. Do you want to take over and kind of take us through where we are in the markets?
Yeah, I'd love to.
All right. I didn't launch GoToWebinar. My fault. Coming up right now. Bennett, tell me what you're thinking about the markets here. What's your feeling? Potential setups? Like where are you at?
You know, we've been kind of juggling that 3,300, 3,330 zone in the S&P here, just kind of waiting for a nice confirmed break of that range. You know, yesterday, in light of the kind of the news that was driving the market, we did see a little bit of a risk off and defensive tape as we juggled that zone. But the more we look at really where we've come overall collectively on the higher degree timeframes, I think I'm definitely favoring our blue count here. Certainly watching some of the implications in the FX space that Alex has been tracking very closely.
Yep.
We do have some alternates, however, that would be supportive of continuation in the markets here. I think the next 2 to 3 weeks is really going to establish the markets for the next 2 to 3 months. We are, entering into some pretty big names here. We have the Apples and Microsofts of the world that, not only hold significant weight within their respective sectors, but just the overall S&P. So, taking a look at the our red count here, which we've been tracking, and the great thing about this particular count is, even with the potential longer-term corrective implications count, it still carried us to the 3,300 level. It gave us the kind of the guide towards that particular price point within the S&P. And now that we're pushing through that level, I'd like to see earnings delivered not only on a quarterly basis, but in line or perhaps increased guidance going forward to continue to support this period of expansion. But I think we're pushing higher. We introduced, I don't think we had a chance to introduce the blue count here last week. Did we cover that, guys?
Yeah, I think we
did. I think we did hit the blue count last week.
I thought.
Are you?
We just haven't officially retired that red count.
Yeah,
yet,
I was going to say, are we done with this red count? Are we done being bearish?
No, we are not. It's still alive.
I'm all but ready to get rid of that count. Yeah.
But,
yeah. I think technically very soon it has to go to history. A few more days and it's done.
But the points that you've been bringing up, Alex, in terms of global macro or risk-off signals are real. So we're not discounting that.
Yep, absolutely. So we're keeping our eyes on that. I still think implications here, provided earnings aren't a huge miss, is 3,400 and above in the S&P. And I don't know if you had a chance. Let's see. Did you get a chance to review the changes that we made here on the blue count as far as the fib projections?
No. Take me through, please.
So there's a little bit of debate regarding the degree violation. Obviously, we don't have a degree violation in terms of magnitude of this correction relative to the higher degree counterpart. We had somebody mention a potential violation in time. Is that something that you have heard of?
No, I really, WD Gann would disagree with me, but I just think price is so much more important than time. I think price could be irrefutable, and I think time could be perhaps debatable. I would not discount a wave count because it doesn't fit the time expectations.
Yeah, my disagreement with that is the same way. I mean, if you can look right there, you've got a clear zigzag that's very short in time, And then you got a flat. Flats are always going to be longer in time than the zigzags. That's just that's just kind of the way it's designed. So
the only
guideline of alternation, right? You've got a directional wave count, then you got a sideways wave count.
Right.
So I'm just in line with you that price is the most important.
I think the only potential violation is if the net percent distance traveled in that blue parentheses 2 is more than the net percent distance traveled in that orange circle 2. That's the only thing that I'm really concerned about.
Absolutely. I couldn't agree more.
And it's not.
And in fact, right.
It's not.
And even if we take into consideration the orthodox low of that wave 2 here in the A wave, that's still not a larger net percent retracement.
Right.
So I don't think there's any reason to discount this wave count simply due to the fact that this is a longer duration correction than this orange wave 2. So just kind of wanted to run that by you guys, as that has obviously implications for our fib projections based on our various wave degrees here. So, given the fact that this here, we also had a possibility of a 1-2-1-2-1-2 situation, just kind of floating through the various bullish possibilities. But I think it's pretty clear that we have a 3-wave structure here within this advance off the lows. So I wouldn't be entertaining a 1-2-1-2 situation. Just trying to hammer out possibilities as we kind of lie out our fib projections here. Would you agree?
Yeah. And do you have a scratch pad account or a scratch pad count, which let's say it's not blue 1, it's not blue parentheses 1, 2. Let's say all that mess in 2019 was just big orange 2. Okay, there you go. Perfect.
Yep.
Oh my, so that's 3,600 still.
Right. An equality measured move would be 35.95.
I love how you're just so ahead of me. Knew exactly what I was going to say.
We had it ready to go. To go.
This is
the possibility.
This is the third of a third, and it's just I can't get over so many people like, oh, short it, sell it, get out, dude. This is where the money's made. Like, what?
Absolutely.
I don't even care if the market drops 10% and I give back 25 grand of my profits. I don't care, because this is the time that if in the small possibility that it is in fact a third of a third, this is where the money's made. You have to be involved. And if I'm wrong, so be it.
Yep, you got to be long here. And this is a possibility that this entire correction is that higher degree wave 2. In fact, it was a 1-2-7-2 extension of this move here. We also have 6-1-8 of CNA within this possibility. So regardless, implications are to the upside. I'm long in my portfolios, juggling some potential options positions. We have previously, when I've been on, I've brought you guys a few individual names that I felt were offered a favorable entry from a risk to reward standpoint. And Track and Square here is a possible catch-up trade here out of a 4th wave triangle. I'd like to see an initial impulse or some sort of a diagonal to development or to develop with some sort of a correction in a wave 2 before getting on board in any options exposure.
Yep.
But I am long here in Square. So this is a name I think could be an easy move back to the old wave 3 highs. I was explaining to this. Sorry to interrupt.
My buddy's a doctor in town, and he had BABA. Can you bring up BABA real quick? And he's like, I want to cut it. I want to cut it. I'm like, dude, just relax. It's an Elliottwave triangle. He goes, would you call me? And I was like, it's going to go. It's going to go. And then he's like, oh, all right, here we go. And then he saw it go. He didn't cut it coming out of triangle. I'm like, now we were talking about Square last night. And I was like, you remember that BABA conversation of sideways triangle consolidation? The same thing's happening in Square. He's like, oh, I got it now. Hope he's not listening. He's my buddy.
And this is actually another one that we were tracking here on the YouTube live stream, looking for this post triangle divergence with a 260 target. We've already achieved 230.
Yeah.
So an excellent move there. AMD is just another stock that just continues to perform. We brought you guys this one back in October, looking for an entry at 28. We're up some 90% off that levels. So I hope you guys have been enjoying the stock picks we've been bringing your direction. We also had Johnson & Johnson was another post-triangle thrust divergence that we were after out of 125 support. So just kind of looking for some similar setups. I think Square offers a favorable entry here. I'm long in the portfolio, and I'll be looking to put on a potential options position there as well. Salesforce, CRM, here's another beautiful example of a fourth wave consolidation, ultimately resolving higher. This is one you actually put to work in the portfolio, I believe, as well. Isn't that correct, Todd?
Yes, exactly.
Awesome. So we were looking for a target here of around 200. We've already seen a move to 186. Just a beautiful impulsive development here out of this triangle divergence. In fact, we kind of back tested this extended contracting trend line offered from that fourth wave triangle. So I think we're seeing a very similar setup here in Square. So taking into consideration some of our fib projections, a 1272 5v4 would be 116, which if you take simply a measured move, so oftentimes I'm sure you've seen this play out when you have a very long period of consolidation in the form of a fourth wave triangle, oftentimes your fifth wave will be at least equal to the widest portion of that triangle projected from its completion. Right. And that would be 123. So the old wave 3 highs at 101. If this market continues to perform and deliver and earnings are not a miss and a surprise, and I think Square is a good candidate for continued upside.
Nice.
That's about it. I'm bullish. I'm long watching through earnings here. I'd love to hear from Terry to see how sector rotations are developing here as we're breaking through that resistance this morning.
Yeah. And one thing, let me just one trade that I'm going to do, and I'll put it out in the portfolio. Intel. Speaking of chips, Intel's set to report tomorrow. I'm not exactly sure on this wave count in Intel. I am long. I think also coming out of triangle consolidation. I'm wondering if we're going to have a little bit of a wave 5 continuation up and out. I have Intel in the portfolio, and I'm interested in writing a call against my long 100 share position in Intel. Implied volatility is actually quite high in Intel going into earnings, so you could get some pretty good juice in any call right you do in Intel. Let me just bring this over. Shrink a 4K monitor down into 1920. Look at the daily implied volatility in Intel. We're all the way at the 68th percentile in terms of implied volatility. So, looking at that count, we might have resistance into 62, 63. I want to see what the expected move is for earnings, and I will probably be writing a covered call against it, bringing some premium. You'd be doing it in the weeklies that have 69% implied volatility right there. So the expected move is $2.85. So that puts you at 63 and change. $63.50 call will get you 53 cents. 64 still gets you 40 cents. That's a pretty big, I think that's pretty good credit to bring in heading into earnings for a 2-day trade. If I get called away, that's fine. It's a short-term trade. It was never going to be a long-term capital gain, so that's fine. So it's something I'll be looking to do against my Intel position. The other thing, let me just bring this up while we're talking about chips. I've been talking about this forever. AMD, I think there's a big magnet at the 21 Jan options, 359 days out. There's massive open interest. There's 36,000 shares. Formerly, it was 45,000 shares. 45,000 contracts, which is 4.5 million shares to buy at 65 1 year from now. I've been talking about this for months. I think AMD broke resistance in the 40s. It continues to go. If you look at that open interest on the call side, 35,000 contracts. Even in the front month Feb contract, there's no open interest of that size, except for the 50 strike. Okay, so that's pretty impressive. There's, a full year out, compared to the front month strike, that's second biggest open interest. Somebody wants to buy 3.5 million shares of AMD, $12, $14 higher than this right now. So I think that's impressive. Okay, let me send it over to Terry. He's going to take us through what's happening in terms of sector rotation. Terry's screen is coming to you.
All right, so with our faces in the way there, let me just kind of move this up a bit. I'm going to work on
shrinking all of our faces down. Please continue.
So this is our long-term perspective here on sector rotation. We talk about this real quickly. The only sector is the tech sector right now that is clearly in a position to continue with its bullish stance, right? It's got a high relative strength related to the S&P, and it's also got a high momentum. You still got these defensive sectors playing their way down. The real estate, utilities, staples, they're all coming down. They are still in the leading quadrant. They can continue to make some performance here, but they're rapidly losing their momentum now. So we're going to switch over to the weekly weekly performance here. And this chart includes yesterday's data, but it's so this is for the week ending on the 24th here. We've got the tech sector continuing to push higher in terms of relative strength, even the healthcare, but financials have degraded. I guess a lot of the earnings last week's in the bank sectors weren't as positive as they could have been. So we've seen a draft down in financials. We've got communications trying to move up here in the improving quadrant, but it's very close to the origin here. And the origin is essentially whatever the S&P is doing, right? So this is anything that's real close here inside the circle is not really outperforming the S&P. It's stuff that's outside the circle is either dramatically outperforming or underperforming. One of the things that I will tell you that I see a caution in, and this is probably the short-term correction indication that we may have heading, is if you look now in the weekly, you see the defensive sectors have made a right angle turn, and now they are drafting higher in terms of momentum, okay, relative to the S&P. Their relative strength is weak, but they've got this vertical movement. And most of the stocks, when they start doing this vertical movement, they're going to head higher back up here into the improving, and potentially at some point over the next several weeks, you could see these sectors push their way somewhat back into this leading quadrant, and we'll see that rotation again. If I just do a little animation there, and I go back to around the 1st of December, you can see how the defensive sectors pushed from the weakening into the lagging quadrant right about there. And then now you can see them rotate over. And then when they're breaking higher, we can kind of use this as a gauge of the heading and the magnitude of the heading, the velocity, the length of the tail, is kind of give us how fast these guys are going to rotate back around. So I definitely think, yeah, I mean, corrections are a natural part of the market, and they have to occur. Pump the brakes every now and then. You can't just stay on the accelerator continuously. So I want to jump in here to a couple of things. We're going to jump into the healthcare group and then in the tech group. So in the healthcare, we're going to look at this weekly rotation in the healthcare. And we talked about the biotechs being in the leading, and they're all starting to lose momentum. Okay, but they're all still clearly over here in this leading quadrant. So this is not the time to sell them, but it is the time to take a look at some of your positions and decide whether you want to, take the profits you've got and move them into something else that may be coming up behind. And those things that are coming up behind are things like Johnson & Johnson, Danaher Corporation, Pfizer, even Merck. I like all these upward headings here, very northeasterly, very long tail here on these guys. Eli Lilly, I've been telling you about that one for a while. Look how high up here. This one's got to be in your portfolio, Todd, if you don't have that one.
I know. I've missed Lilly.
I have been standing on the porch screaming bloody murder with these things. So.
I know.
All right, let's jump over here.
You could add to the portfolio.
That's your money, Todd. I trade my money. You trade your money. So let's jump over here into the tech sector. So the big thing with the tech sector has been the semiconductors. They had a huge, like a 60% run up last year in 2019, and everybody was afraid of how much more can they go. And here we are 3 weeks into January, and the semiconductors just continuing to push higher, especially things like AMD. But I think you're going to see that most of those semiconductors are going to start to push lower they're losing, they're drafting down, their momentum is falling off. And then one of the other industry groups in the tech sector is the software group, and we're starting to see, you know, Adobe and Salesforce and you know, a few of these, even Microsoft. Microsoft is buried right in here. These guys are coming up to take the place. So, you know, when I showed you earlier the XLK being firmly out here into the leading quadrant, you know, it's got multiple industry groups that are holding it all up. Look at all the vectors here, right? You know, I mean, Intel, Todd, I don't know which way you're planning on playing Intel, but Intel has been pushing lower.
Well,
it's definitely down here into this weakening quadrant.
I'm long, but I want to write calls against it into earnings because volatility is quite high heading into earnings. So I'm going to write a call against it.
So, but anyway, you've definitely got a handful of. You have to give me a moment here. My computer's freezing, but you've definitely got a handful of tech stocks here that are going to continue to outperform in the market. And you know, this whole thing is just, it's relative to whatever the S&P is. So if the S&P continues to push higher, these ones that are outperforming the S&P are going to push even higher than that. If the S&P falls, the ones that are outperforming the S&P are not going to fall as fast as the overall market. So that's kind of my 2 cents worth here in sector rotation.
Very nice. Very nice. Let's switch gears quickly. I want to bring Alex in. Alex has been busy on the foreign exchange side. We're starting to see some movement in the crypto side. Alex K, the screen is yours.
I'm here, Todd.
Look,
oops.
That's scary.
It's just a colored face. Yeah. Okay, guys. So we had a nice beginning of the correction that we kind of anticipated last week in a Bitcoin. I think that wave blue 4 is unfolding. We had a nice 1, 2, 5 waves up in the blue wave 3. Really nice 200% projection 3 versus 1. So we compared the duration that we went on the upside from measuring and projecting the Fib ratios from wave 1 to the lows of the wave 2. So really nice target, and move down for now has been in impulsive manner. I'm having also the time dimension here, so I'm expecting this consolidation to try a little to last a little bit more. But I'm going to start buying it on this first pullback at the C wave around 8,000, 8,100, because the projected either a triangle or a zigzag or a complex corrective pullback, it's not going to go by far much. Even if it goes marginally lower, I will be happy to either add or to stay with this position, because I think this will be the key levels between 7,900 and 8,000, and that we're going to continue to make a nice push up in a wave 5 close to 10,000. And I think these levels from the larger perspective will be the first resistance, because the usually X waves or a B wave from the previous corrective moves are a natural resistance levels. So I think that after that we're going to see a nice pullback in the orange wave 2. For now, things are going as we are kind of tracking it. We are planning the first entries. So all fine. I saw some of the clients wants to see Ripple.
Yep.
So let me show the Ripple on the larger time frame. I will show you weekly wave count. And so far I like it. We have here a wave 1. It is not here in bars because we don't have that far data on this crypto compare software. So we had a nice push up in 1, which is real, and then we have a long consolidation in wave 2, a very impulsive wave 3 on the upside, which is kind of a discernible by its character to Elliottician guys. So there is a big push on the upside in a 1, 2, 3, 4, 5. So nice triangle in a wave 4, consolidation, final push up in a wave 5, and now probably the corrective pushback over in a wave 4 is done. We have a nice equality because the time elapsed in a wave 2 is equal as the time elapsed in a wave 4. So on the smaller time frame, we are expecting to see a 5 waves up, which is kind of are seeing right now. We need a little bit more upside to anchor this wave 1 without invalidating the subways. And then we're going to buy the ripple on this pullback in the wave 2. So ripple for now is poking above this corrective channel. And if I see a final push up in a wave 1, I'm going to buying it on a pullback in a wave 2. So many of the other cryptos are in the same state. So every of them are almost in a wave 4 corrections. And that was actually the theme of our members webinar yesterday, because we go all of these cryptos one by one.
I think we saw Monero be the first one to pop out, right, Alex?
Monero was
the
actually
first one that popped
one,
above its channel, and Ripple's kind of the last one coming up.
Monero was really aggressive here in breaking this channel. It came nicely to our target, and then it's kind of a breaking on the upside. So I think maybe Monero is going to be a leader for the time being. Also, the Bitcoin dominance chart, it shows us that it's still not time to go for alts. We're going to wait one more push in a Bitcoin on the upside on that chart, and then more focus on the altcoins, since we think they're going to temporarily outperform Bitcoin. So some of them went really obnoxiously high. Ethereum Classic went how much, Terry? It's like
it had a double. Yeah, it went from $5.50 to $11 in one day. So it was a double
in one day. Yeah. So this one doubled itself. Also, Dash went something like 200% on the upside. This is not the right chart. But the main theme of all of the normal cryptos, as I can say that are displaying some normal, this is Ethereum dollar. So the theme is generally that we are in a fourth wave correction, and we have one more move up to complete impulsive waves over this corrective channel. So the theme becomes increasingly technically, from the Elliottwave perspective, potentially very bullish for the further upside. So I'm ready to buy on the pullbacks.
Very nice. Very nice. Take us into, are you okay? Do you want to switch over to FX right now?
Sure,
okay.
Sure. Tomorrow we have the ECB. Yep. So on euro dollar, we are still keeping our stance here, still sideways price action. I still think we're going to reach this 108, 107, 108, 106 levels. As you can see, the recent move, is still kept in a corrective channel, and we're moving slowly to the downside. This, for now, it's not, from the Elliottwave perspective, a bullish price action. So I think our stance is still going to be short-term bearish until we reach this target. And technically, I will be happy to buy it here, because we have some longer-term trend lines looking the monthly, weekly charts. And also it fit nice for this ABC pullback to 118, 120. So I'm waiting a little bit more, being patient here, and I'm waiting to reach this target. We had a nice trade on pound dollar. We captured something like close to 200 pips.
Yeah, that was a great trade.
On the short side. And now we are looking to short it again around 133.0. I think we have a counter trend move in a C wave now developing. We have been tracking this for a while. I didn't like this structure there, so we exited around these lows. And supposedly now we have a nice 1-2, and we are developing a blue wave 3. So I'm ready to pull the trigger again here, close to 786. So 133, 2050 will be my entry on the short side for the ABC pullback on the larger time frame. I'm going to look to capture this equality here. So it's a nice trade, kind of a 300, 400, 500 pips on the downside. And on the larger time frame, we look pound for a pullback and a short-term move on the upside. So this will be a wave 2 or either a complex correction for a lower levels. But I'm pretty sure we are going to get this C wave down, and we are going to trade it with our members. Dollar yen is still very challenging. We are basically very close to this very strong key fib levels here. I'm still thinking we are in the wave 2. The yields doesn't sound very good on the upside. So I'm going to be start to positioning ourselves on these key levels here on the short side. And I'm also have a bullish wave count. If the S&P starts to move higher, this is actually the bullish wave count. We're going to go to a first resistance here if we peak 3,600 in S&P, small pullback in an E wave, and then we continue higher in dollar yen. But I'm still favoring a potential move down because I don't see any advance in yields. Also, our CAD yen.
Hold on, Biff. Yeah, I just want to underline that, and I always bring equity investors and traders' attention. If Alex is right in that dollar yen 110 level holds, we really need to pay attention. If you see a weakening of the dollar but a strengthening of the yen, that's a risk aversion, risk off signal that will echo through the global markets. So we'll want to watch how the equity markets react if that happens, and it will matter.
Yeah, exactly. Both of my wave counts on the Aussie yen and on the CAD yen, it's still holding. We didn't break the invalidation levels of either of them, so I'm very attentive here in expectation of a potential impulsive move down, and I want to trade this with our members. One of the trades we are looking in also is Euro Norwegian krona. I see here a nice development, and I'm waiting. There was announcement 2 months ago that the central bank will stop cutting rates. They actually raise rates back to 0, and they're not going to go negative. They actually are planning to start raising rates slowly. So from the highs here and the strength of euro, I see a nice 5-way move down, up in 1, down into very nice third wave move lower in the wave 3. So I think we are here in a pullback. I'm waiting this kind of a time measurement and invalidation level to hold. And if I see an opportunity, I will be pursuing this on the downside for this last portion of the 5th wave on euro NOK. Gold is still kind of a sideway movement. We still, I think, didn't complete yet this wave B on the upside. I'm expecting maybe a little bit of pullback here, but I'm still going to look higher for one more push on the upside on the bearish wave count. And if we are in the bullish one, that's a different story. We might go much higher in gold. So I'm still tracking these 2 bullish and bearish wave counts on gold. So I think that volatility on the FX is going to expand, and I'm ready.
Good. Very good. Duly noted. So I agree with you, Alex, on the gold. I was also looking at potentially adding some TLT, which is the 20-plus year bond ETF as a hedge. Gold looks strong.
Yeah, exactly.
And Alex's concerns that he's bringing forth, we really need to pay attention. If they start to develop, become a reality, we need to watch.
Yeah, but I was thinking that, Todd, I mean, we might see the situation that you pointed out on the premier member webinar last Wednesday. We can see maybe stocks and bonds and gold go together.
Yep.
And yields go down, and we can see some weakness in dollar yen on the base of yields. So that's also possible. So I'm not excluding any of the scenarios.
I mean, we have a very accommodative Fed, and until we have any signs of inflation, PCE deflator still, well, it's below the 2%, and while inflation continues to be benign, you know, it's crazy, and
Yeah.
it's not crazy. It's you know, the Fed has a dual mandate. You know, they price stability,
You're
which
using
which
Tudor
includes
Jones words there.
huh?
That crazy. I said
No,
you're
Yeah.
using Tudor Jones crazy.
They've got
You
a
still
dual
in the back
mandate:
of your head there.
maximum employment, and price stability. Price stability includes
Yeah.
capping inflation at
Yeah.
2% and also stemming any underlying deflationary forces, which some would argue that, you know, technological displacement of workers is real, and there's just an underlying deflationary tone because of that. So, you know, I guess, you know, well, at some point, this insane monetary policy experiment will you know, we'll have to answer to that. A $4+ trillion monetary policy experiment. We'll see how that ends. Maybe it ends fine. Never has in the past, but for now, it's boosting equity prices. So today, guys, you know, you look at the sector leaders, it's XLK again. This thing, if you're looking for an ETF that you want to hold, it's XLK. I mean, this thing has outperformed the market handily. I mean, it's not only outperforming the S&P, it's outperforming the NASDAQ, the NDX 100. It's outperforming the Qs, which is the ETF that tracks the NDX. The XLK is the pure technology play. And if you look at it today, we're being led by IBM. Strong report, strong earnings out of IBM, Fortinet, ADP. There's the Semi, QRVO, KLA 10 Core, IPG Photo, Skyworks, Intuit, Broadcom, Lam Research, NVIDIA. I mean, these are sorted by percent change within the XLK. In terms of weighting, here it is right here. Microsoft, Apple, Visa, MasterCard, Cisco, Intel, Adobe, Oracle. I mean, there's a lot of quality names in there in the XLK. So continues to be a big holding of mine. I just continue to be bearish. I don't see a lot of reason to overthink it right now. It's one of my biggest holdings, XLK, second biggest behind the SPY. Frankly, I wish it was my biggest holding, but that's what it is. Okay, so so that's that. Appreciate you guys following in. Great job, Trading Analysis Team. Check us out at TradingAnalysis.com. We have full service stock options, investment, crypto, Forex. We'll even mow your lawn for you, anything you want. There's Trading Analysis right there. We have obviously software partners that we're working closely with. MotiveWave, the Elliottwave software we use, as well as Optima. Those are the charts that Terry's using to do relative rotation. They're very good charts in their own right. If you would like more information on the wealth management side, if you're interested in talking to my team and I about handling your portfolio and retirement, this is my new company, Ascent Wealth Partners. It should be on the website today. I just wrote up my bio, and it should be going up there. So check us out. It's AscentWealthPartners.com, and I'd be happy to speak to you. All right. So Trading Analysis Team, thanks very much. Great work.
Sounds good. We'll see our members in 15 minutes.
See the members in 15 minutes.
Todd.
All right, guys.
Okay.
Thanks, guys.
All right, so if you enjoyed the show, please throw a thumbs up there on the YouTube channel. Let Google and YouTube know that you're liking the work. Throw a question, comment. If there's a guest you'd like to see, put it down there. Hope to talk to you if I can help you on the wealth management side. If you want to stick in the trading side, generally I'd recommend that you keep, and this is what I've told all my members, you keep 5, maybe 10% of your overall investment portfolio with trading analysis in the short term. And then, obviously let the majority of the portfolio go in the, a little bit more of a longer time frame investment horizon. So that's what we've always told our members, and it was just a natural progression to go down this path. So thanks again for watching. Appreciate you taking your time with us, and we'll see you next week. Members, we'll see you guys in about 15 minutes. All right. Take care, guys, and I'll talk to you soon.